Tesla began its push to 2000 with the beginning of the 3-day rule today. This is Greg for Teslafaninsight. Thanks for joining us once again. Wanted to thank our Patreon supporters as well as our subscribers. If you enjoy the show, please take time to like and subscribe. So, as you know, we have a concept called the 3-day rule. Anytime a major company event happens or a major analyst announcement or something like that occurs, as you know, large institutions will wait for analysts to inform them of what their sense is of where things are headed and then make changes to address either buying or selling stock based on the recommendation made by those analysts. So today is rather interesting because we usually don't start off with written matter. We'll post this as well, but I just thought it was a pretty amazing way to cover our story for today. And if you go to CNBC's website, they have a story called Mystified Tesla Bears on Wall Street admit there appears to be nothing that can stop the stock right now. So the article, the portion I want to read to you says Barclays and Morgan Stanley continue to hold underweight ratings on electric vehicle maker, but both firms said Tuesday that the stock is poised for more upside, at least in the near term. And then they begin with a portion of a quote that says, "While we still believe Tesla is fundamentally overvalued, we see nothing to prevent the shares moving higher in coming weeks," Barclays said. So this is a very interesting piece. So the backdrop to this is the fact that now that we have numbers from Tesla, we basically have a 3-day step-through process where the analysts review those numbers to determine whether or not they're solid. They then follow on to modify the structure of their spreadsheets that they had built prior to those numbers, and then they draw conclusions from that and ship it in to the firms that are paying for it, either directly or indirectly through banking business or paying for that research directly. So I was pleasantly surprised. Part of the reason this whole thing works is those analysts actually give the research reports to the entities that are paying for it first, and so they get to move the stock before regular consumers get a hold of that information, as is the case here with CNBC presenting that research. So the core idea of this whole 3-day rule that we came up with was just what's happening right now. Thing occurs, analysts review, analysts then write report on that review, analysts present that to the large institutions prior to giving it to the general public, and now we have the reaction of those large institutions in terms of buying or selling the stock based on the recommendations made by those companies. The statement you just heard is a really interesting one because those companies are still retaining their underweight or undervalued analysis of Tesla, but at the same time they're hedging by saying, we think the stock is going to rise. So in this case, I can understand what they're actually saying in that the problem that's happening right now is whether you think Tesla is a good or bad company, their entry to the S&P causes a supply and demand problem on the stock, as in there's only so much supply of the stock, and as the S&P demands that stock for its index, there's no choice but for the stock to rise because you have increased demand with no increased supply. So this is a very sort of interesting process. So in essence, then you can have a stock rise when the analysts aren't supportive of it just because it's entering the S&P, and once it enters the S&P, those indices are forced to buy, and you have a nice upward draft of stock, etc. So I like to stick to my guns. I mean, clearly we've presented the concept of the 3-day rule for a long time. A number of you have told us about the amount of money you've made off this. So I kind of wanted to focus on that today as a way to sort of update where we're at. Given that the stock sort of bounced around wildly yesterday, it kind of suggested the 3-day rule may not work as planned. It's often hard to assess whether it works or not until we actually get in the zone. So if you look at it, we're basically 3 business days when Tesla came out with their numbers, and this is given a chance for the whole process to work. And we'll actually see what happens. as I said, I'm sticking to my guns. I think the stock is going to ride higher, and perhaps nicely so, as the institutions are green-lighted to go ahead and buy. And they're actually incentivized to buy earlier than later because there's so many follow-up things that might occur. So usually the big institutions spread their trading across a number of firms, and they spread it out over a couple of weeks, whatever position they're going to take in anticipation of major news, in this case, heading into Tesla's earnings / heading into also the access to the S&P. The other thing that's kind of interesting, I think, is that there's this big problem, which is a lot of companies are looking at the same data. So what's the process for companies to differentiate themselves in terms of how they're going to present that data, et cetera? Among the techniques you could do potentially is to front run the S&P by buying shares earlier than its entry once you're clear that it's going to make it in. So we're kind of seeing that as well. So I think right now it's an exciting time for Tesla in general. Stock price is good. There's a story idea that comes sort of after this, and it's the next show we're shooting, and we have a focus on what's going on in China. And in essence, the analysts were of the opinion that Tesla was going to really not have a great quarter because of the shutdown period during COVID. And clearly, the numbers were amply made up for by the China Gigafactory. So now we have an interesting situation, which is, number one, the analysts didn't get the number right, but number two, they missed the number by 20% or, 25,000 cars, let's say. So what this brings up is a whole question mark of, are we doing a bad job or what's going on? And it really has more to do with the fact that it's easy to station somebody to count cars produced in Fremont and not as easy to station people to count cars being produced in Shanghai. And so there's a whole nest of issues associated with Shanghai, which is, as I said, our next show, which is how do we assess where Tesla is in China and how does it affect the whole company? And I think that's pretty exciting. The general answer that I'm giving is that they've produced more cars than expected, clearly, and they're in a hunt right now to exceed the production that's going on in Fremont. And I think this is really good news to have the competition between the two buildings occurring, and looking forward to Germany perhaps coming online to enter the fray to battle who's going to be the dominant production facility. So there's one other thought that I wanted to mention in this realm, not to give away my whole show, but the other thought to think about here is that we have an interesting situation going on where Elon has forecasted 500,000 vehicles produced for the year. All of the analysts are really proud of themselves because the last time Tesla presented any kind of numbers coming out of Shanghai, they said 3,000 a week was our goal. So I was listening to the Morgan Stanley analyst yesterday, and he pointed out that if you multiply 50 weeks times 3,000 vehicles, it works out to 150,000 cars. And so he was very confident in his presentation that based on where the information came from, that information did not come from somebody sitting there watching a number of cars being delivered by truck into China. And the answer to that is that the real number isn't that, and it's clearly higher based on what we see with the numbers here, but Tesla isn't telling us what the real number is. And in theory, this is probably the number one number we got to figure out as we head into the earnings call. So I look forward to this question being asked and answered by the folks at Tesla, because obviously it is going to have big implications. The numbers that I think are worth thinking about is the fact that Elon indicated that the step process for sales in China would be, or production in China would be 1,000 a week, 3,000 a week, and then jumping up to 10,000 a week for that vehicle. So I found it fascinating that Elon has chosen to present the concept of 500,000 vehicles when, in theory, if China produces 1 year, they do 52 weeks or 50 weeks of 10,000 vehicles a week equals 500,000 cars. Fremont is actually producing a similar number. The current stock price of Tesla anticipates them getting to 1 million vehicles, either 21 or 22, not in essence this year. So this presents an interesting reason why Tesla stock price tend to be so volatile, is that Elon has a habit of restricting access to information, and then once that information comes out, we know what the reality is. All of a sudden you have this transition in what people are saying and doing, especially on the stock price and its acceleration. So, so basically, we have a situation right now where the large institutions, based on the 3-day rule process, have been told that the stock is going higher from here. And we haven't seen the hard numbers that are being presented, but the stock price number is somewhere between 1,500 and 2,000 that they're presenting to these institutions. And we expect them to start reacting to this because they really need to sort of get ahead of how these numbers are going to hit with earnings and with the backdrop of the S&P. So if you're a money manager that's required to invest in entities like Tesla, you really have to pull it together, sort of swallow hard and buy. And you do have the backup now of analysts saying there's a valid reason to be in that buying position. So we'll see how this all plays out today. I think it's a great time to buy the stock because of what I just described. I also think it's a good time to buy the stock heading into earnings because I think we'll have a backup of profitability to go with this. And Elon really knows the implications of this.